Put my Sprite in.
He said he was driving, so he may have some issues breaking up.
Oh, okay. Well, I can introduce our speaker today. Our speaker is our past president, Mike Hackett, who is also very good at monitoring our funds. And every year telling us, I remember last year he told us, there was going to be a decline in the stock market. And what do you know, like 2 weeks later, it fell about 40 points. And then it went downhill from there. So, but of course, that had to do with the pandemic, which he didn't quite have in mind at that time.
No, definitely not.
Yeah. So Mike's going to be coming in here today to be talking to us about where he thinks the market's going to be going this year. Tom, you want to go ahead, or Mike, do you want to go ahead and start? And I'm going to mute everybody else.
Yeah, let me see if I can share my screen.
Okay, and you'll have to unmute yourself.
Okay, let's see. All right, can you see my screen, everybody?
Sure can.
Okay, let me go to. All right, here we go. So I try to come up with a little cool, fun title every year for what I'm going to talk about. And I guess a little bit of a theme this year is this is basically 10 years in a row of the stock market going higher. So too much of a good thing is wonderful. We'll take it. How long that can continue, I don't have any idea. But again, 10 years in a row, too much of a good thing. I like it. We love it. So let's see if I can get to the next screen here. As I always do, please know that what we're going to talk about today, the opinions that I'm going to share with you, they're mine and mine only. They may or may not have anything to do with what Harbor Trust feels, what Harbor Trust is telling our clients. You asked me to come and speak, so everything I share with you today is my feelings about where we're at and where we're going. I looked at this earlier today, and it's a bad picture. You may not be able to see it very well, but it's a picture of the Wicked Witch of the West from The Wizard of Oz with What a World, What a World. So many things going on that are affecting things politically, economically, certainly socially. So there's so many things that are going on, and those do have impacts on the markets and how money moves around. As I always do, I always start by saying, what did I predict last year? And then I give myself a grade of how well I did with those things. So the predictions that I made for last year, the first prediction I made is I said that the price of oil would end the year between $55 and $65 a barrel. You can see we started the year at the upper 50s. You can see obviously what happened in March and April when COVID came around and dropped everything and caused chaos in the world. And then we proceeded to go up for the remainder of the year. And we finished the year just under my prediction of 55 to 65. And the price of oil finished the year at $52.36. Just to give you an idea, I think it is over that area now. The price of crude oil today is, it's not bringing it up right now. I believe it's 56.57. So I was close, but I did not get it perfectly. So I'll give myself an A- for the price of oil. I predicted that the 10-year Treasury yield would end the year between 2 and 2.25%. Again, we started the year at around 1.8. COVID came along, and at that point, then everything went a little haywire. The government started to flood the money with market to try to keep the economy going. So interest rates dropped dramatically down to 0.5, 0.6%, which is the lowest yields they have ever been in the history of yields. And then as you can see throughout the rest of the year, we proceeded to drift higher and higher. But you can see we got nowhere near the 2 to 2.5 or 2 to 2.25% that I predicted the year. So very close to a fail on this. But since we were raising at the end of the year, I give myself a D for interest rates. Finally, I always give some stock market recommendations. And I said that we would get a 15% pullback in the market. And then by the end of the year, we will get that full 15% back and probably end the year a little bit higher than where we started at. So you can see on this chart, we started off in January going up a little bit. Again, COVID came along and the stock market dropped dramatically in March and certainly got to the 15% that I recommend or that I predicted we would get to. And then you can see throughout the rest of the year, we then proceeded to get that back. There's two lines you can see here, and I just put them in because when you turn on TV, you hear about some of the major stock market indexes. And so I put two of them on here. The black line is the S&P 500. And the yellow line is the NASDAQ. And so the main one that we talk about in the world is the S&P 500. That's the black one. So you can see at the middle of November, I was dead on my prediction about a drop in the market. And then we'd end the year slightly higher. And then we proceeded in the last month of the year to keep going higher. And so the S&P ended the year at plus 18%. So I was right in that we would get a dip. I was right that we would get that dip back and we go higher, but I was a little bit off that the markets continue to go higher than I thought they probably would. So all things being said, I'll give myself a solid B on a stock market prediction. So not the greatest year I've ever had in making my predictions, but certainly not an epic failure either. There's some very interesting things going on in the stock market right now that most people don't realize and or understand. So if you go to dinner parties and you're talking to your friends, you may hear anything from somebody saying, oh, I did 8 or 10% last year to I did 27% last year to anything in between. And that's because of all the interesting and I'll call them some levels crazy dynamics that are going on. So I'm just going to share a couple of those with you. So again, I referenced that the major stock market index when you turn on the TV is most people will talk about the S&P 500. That's just a basket of 500 companies that are 500 of the largest companies in the world, ranging from Google to Tesla to Amazon to Coca-Cola to Clorox. Again, it's 500 of the most well-known names in the world. So this is just characteristics of those 500 names. So if you take a look at the top, some companies pay their shareholders a dividend, which means they take some of the profits that they make and they pay those back out to shareholders. And that entices people to want to own it because they're getting some of their money back on an annual basis of the company. So in general, the higher a stock that pays a dividend, the better it is for most people. But if you look over to the far right-hand column there, you can see under 1 year number, which is 2020. The stocks in the S&P 500 that paid more than a 3% dividend had a negative 12% rate of return last year. If you look a couple down, the stocks that paid no dividend or the companies that gave their shareholders nothing back in the form of annual cash basis went up by 42% last year. So think about that. A 54% difference between the companies that returned money to their shareholders in the form of dividends and the companies that didn't pay their shareholders anything in the form of dividends. That's a huge, dramatic difference. So if you're out there owning the Verizons of the world and companies like that and NiSource and these nice solid companies that are paying a nice dividend, you might have lost money in the stock market last year. And then the people that are out there owning Tesla and Amazon and Netflix and things like that had the 40% types of returns last year. So it's definitely was a have and a have not year in terms of whether you were a nice, safe company or you were a very risky, aggressive type of company. If you look in the middle of that chart there where it says PE over to the left, the easiest way that you can take a stock and come up with what its value is and is it cheap, expensive, whatever, is you take the earnings of the company, you divide it into the share price of a stock, and it gives you a number. In general, the lower the number, the better, because it means I have to invest less money to get $1 of earnings back out of the company. So in general, you want a stock that has a lower PE. So look at this chart here, and if you look down at the bottom one, the stocks in the S&P 500 that had less than a 10 times multiple, go over to the far right, did a negative 7% rate of return. The stocks in the S&P 500 that had a multiple greater than 25 did a 28% rate of return. So the same story. These nice safe stocks that pay a good high dividend did bad, and the really aggressive companies did great. Well, the companies that had the nice safe PE ratios had a poor year, and the crazy high beta companies that had the multiples over 25 did a 28% rate of return. So huge variance again between the safe stocks and the aggressive investments. The last one that I'll point out on this chart is right below that, where you see the market cap. Market cap is what's the value if you took all the shares of a company and multiplied it all out. What's the value of that company? So here you can see the companies in the S&P 500 that have a market capital of more than $30 billion did a 20% rate of return on average last year. And the smaller companies that had less than a $10 billion, which are still gigantic companies, that had less than a 10 billion market cap had a negative 17% rate of return. So again, the point to all three of these is that there's huge dynamics that are going on, and there's haves and have-nots, companies that are doing phenomenally well and companies that are struggling. My guess is if I just would have put a poll out before I started my presentation and said, did any companies or were any markets down last year, most of you probably would have said no. And when you look at some of these dynamics, again, the smaller cap companies in the S&P 500 last year, on average, were down 17%. So again, there's just a lot of weird dynamics that are going on that are driving things and affecting things in the market. Another way to look at things is now you can take the S&P 500 and take all those 500 companies and break them off by the type of company they are. Consumer discretionary companies like Disney, like Apple, where you discretionary and make decisions about spending your money at, you can see for the 1 year had a 33% rate of return. Two below that, energy companies last year had a negative 33% rate of return. Right below that, financial companies were basically flat. You go down a couple more and you can see technology companies were up 43%. So again, just massive disparity between different sectors of the market and what drove the market. The last one that I'll point out is based on your characteristics, whether you pay a dividend, you don't pay a dividend, other things like that, companies are labeled as growth companies or value companies. And when you look at the 1 year number here, it doesn't matter which group you look in on the left, that's just several different indexes. But when you look at the 1 year number, you can still see the difference. In the very top one, the difference between the Russell 1000 growth index last year and the Russell 1000 value was 35% difference. And any one of those you can basically look at is you can see the difference between growth and value last year. Growth companies basically outperformed value companies last year by over 30%. Again, just huge dynamics and things that are going on in the world. I changed my presentation today, so I apologize on this one. And then I forgot to that I had already sent this to myself. And so this is supposed to be items that can affect the markets in 2021. Obviously, we have a brand new president. We just did an inauguration yesterday. And with the brand new president, there's a very real chance that we're going to get some tax law changes. There was some stuff that was introduced yesterday about differing opinions on the stimulus package, and I think we're going to see some dramatic differences in what we thought the stimulus package might look like to what it's actually going to be. The trade status with China is going to be a very real issue that we have going forward. COVID, are these vaccinations going to work? Are they not going to work 6 months from now? Will we be back to a life that we knew a year or two ago? Will we not? And social tensions are certainly a very big deal going on in the world. So all these things are out there. But the one thing I'll say about that, I get questions, we get calls all the time with these things. I was looking back through my presentations that I did years back, and there's been everything that's been out there, from Great Britain leaving leaving Brexit, to Greece going bankrupt, to the social tensions we had a few years ago. There's always issues in the world. There's always something out there to be worried about, but the stock market always finds a way to work through these things and always finds a way to drift itself higher and make money no matter what's going on in the world. So these are some things that are going on that can definitely have some impacts on the markets going forward. It's a lot to digest. It's a lot to handle. It's a lot to make decisions based on. But as I always do, I say I will give you some of my predictions for this year. So I thought if I could put in the Wicked Witch of the West earlier, I guess I can add the Scarecrow in it, is what's going to happen, where we're going to go this year. We'll see. I'm going to give you some predictions, and we'll see how well a year from now I did with those. So the first thing I'm going to say is I think this year is going to be marked by huge swings, up, down, sideways, sectors, you name it. I think this is going to be a year. For the most part, there's always some volatility in the market, but when you look back over the last 10 years, it's been a pretty good, easy ride going forward. Outside the little COVID blip we got last year and some other things, it's been a pretty good ride going forward. I think there's going to be a lot more volatility and a lot more that we're going to have to stomach going forward, and certainly in 2021 with all these things we're trying to digest. So I think there's going to be huge swings in the markets. So with interest rates, I think we're going to see this continue. Believe it or not, when I showed you that chart, the 10-year Treasury got down to 0.6% in March and then ended the year a little over 1%. And when you talk about going from 0.6 to 1.1 maybe, that doesn't seem like much. But when you put it into context, that's almost doubling interest rates. So that does have a dramatic impact on things that are going on. So even though it doesn't seem like it when you talk about the amounts of it, the percentages and things like that have been pretty dramatic, and I think that will continue this year. I'm going to make a prediction that the 10-year Treasury is at 1.1% or so today. I think the stimulus package and some other things eventually will cause inflation, and inflation causes interest rates to go up. So I'm going to predict this year that we're going to see a bouncing around of interest rates, and at the end of the year, we'll be pushing 2%, and I won't be surprised if we're over 2%. And again, to put that into context, if we're at 1.1 and we go to 2, that means we'll basically double interest rates again. So that's a pretty healthy, strong move. With stocks, again, I think we're going to see a ton of volatility and a ton of rotation, as I just showed you in some of the slides earlier, by the sector of the market. Technology was up 42%. I don't think we can expect that technology is going to be the leader and be up 42%, just like I don't think energy can be down 33% and be a laggard. So I think we're going to see a lot of volatility and rotation by the sector, by the style. Again, growth versus value, and how growth has just dominated value for a while. And then market cap, again, large cap doing so much better than small cap. So I think we're going to see a lot of volatility and rotation in these. This is going to be one of my bolder predictions that I've ever made. We are 3 or 4 years in a row of growth significantly outperforming income stocks. And I'm going to make the prediction that in this year, income stocks will do better than growth stocks. I think income stocks or growth stocks has done insanely well, which has made them expensive. And I think income stocks have underperformed. So I think they're very, very cheap. So I will make a prediction that income stocks outperform growth stocks this year. Another pretty bold prediction, in my opinion, is I'm going to predict that we get a 25% move in the stock market this year. So what do I mean by that? Let's say that the stock market goes up in January and February, and we get to March 1st and it's up 10%. My prediction is that at some point during the year, it will be down 15% and we'll have dropped 25% off the high, or vice versa. If something happens and the stock market gets down 15% at some point, I think we'll end the year up 10%. So I'm predicting at some point during the year, we're going to see a 25% move from the highest point to the lowest point. That's a very dramatic move in terms of things, especially if we get up 10% and they get down 15%, that means people's values went down 25% from where they were. So I think that's a pretty bold prediction on my part, but I think, again, that volatility is going to be a part of the equation this year. And the last slide that I have, and I'll open this up to some questions, is I always get asked every year about some fad or theme that's going on. And I was looking back through my presentations over the last 10 years or so, and some of the fads and things we talked about a couple years ago was Bitcoin. In 2009, when the markets went down, we had the meltdown, everybody wanted to own gold, and I was asked about that. A couple years ago, when the price of oil got to $120 a barrel, we spent a lot of time talking about that. Last year, we spent a lot of time talking about cannabis and how it's going to impact life in the markets. So the theme, or the item I'll talk about for this year, for 2021, are COVID stocks versus anti-COVID stocks. What do I mean by that? The world looks at things and says every day when we get news about how we're doing. So if something comes out tomorrow and it says that the vaccinations are going ahead of plan, that people are taking well to them, I guarantee you're going to see Disney is going to go up, Boeing is going to go up, casino stocks are going to go up. Why? Because the perception is that we'll get back to a world that we used to know. And Blue Chip Casino, for example, which isn't even open 24 hours a day and can't have all of its machines open, their stock will go up dramatically higher because the perception is that they'll make more money if things go well. Flip side to that is if a news article comes out tomorrow that COVID numbers are going up dramatically, there's a new strain out, then you're going to see all those casino stocks go down, and you're going to see the vaccination companies and other things like that will go up. So for good or bad, the market kind of takes every company right now and has bucketed them is, are you good in a COVID world? Or are you good in an anti-COVID world? So the theme for this year that I think is going to be very dramatic in the markets are these two types of companies. So my last prediction that I'll make for this year is I'm going to say that the COVID stocks rule. And I don't think ever in my 10 plus years here have I given individual stock names to anybody. And so I give you these names with a grain of salt, and that these are examples of what I believe are going to be the winners. Do not take this as that I'm saying just go out and run out and buy all these. There are some of these that I own, but these are examples that I'm giving you of what I believe. I don't think that the vaccinations are just going to change the world, and that by summertime that Washington Park is wide open again, that we're going 80,000 people to watch a Notre Dame football game. I don't believe that that's going to be the world that we're in. We may get to that point at some point, but I don't think that's happening in 2021. So I think stocks that do well when we're still worried about COVID are going to do well. I'm so excited about this meeting and how it's functioning today, that we have breakout tables and we're able to do this. If we're all worried about getting sick and we don't want to get anybody else sick or anything, I don't think that we'll get away from this anytime soon. So Zoom meetings, WebEx meetings and things, I think we'll continue to do phenomenally well. Any type of documents that you can sign to get a car loan, to do your mortgage, anything like that. Our company is moving now to electronic signatures for everything. So a company like DocuSign, I think will continue to do well. Two companies that you may or may not know anything about. They are both related to online security and protecting our passwords and our networks and things like that. But CrowdStrike and Okta. These things have both done amazingly well. CrowdStrike, for example, I think last March when COVID came, got down to $50 a share. I think today it's floating somewhere around $250 a share. So it's certainly not cheap. But again, I think in a world that we're living in, protecting our networks, protecting our passwords, protecting our online information is going to be critical, because we're going to do more and more online. So I think those two companies do well. Clorox, I just added this into my own portfolio not long ago. I think we are teaching our children now that when we were kids, we went to the bathroom and we ran right back outside and we put our hands in the dirt and we played. We are teaching our kids now that every time they do this or that, they wipe their hands down, they wipe their desks down and things like that. I don't think that habit that we are forming is going to change anytime soon. So I think Clorox continues to do well. And then the vaccine companies, I think we will just continue to work to try to make this world better, to find vaccines that will protect us. But remember, folks, at the end of the day, I'm not I'm not a doctor or anything else like that, but COVID is a flu virus. We've had the flu forever and a day, and we've never found the pure cure for the flu. I don't think that we're going to find the pure cure for COVID either. I think we'll find variations and ways to make it better and make it a better world. So I think these vaccine companies for a long time to come are going to do very well, because we're going to continue to spend money and we're going to continue to invest to get these vaccines. So again, do not hold me to any of these names. Do not just run out and buy them all today only because it's on my list. But these are our examples of what I think are going to be the winners in 2021 in the market. So with that being said, as I always do, thank you so much for letting me do this. It tickles me that I've done this for so long and that you think it's valued enough that you have me keep coming back. And if you have any questions, I'm more than willing to try to answer them.
Okay, just to let you know, if you want to ask a question, make sure you unmute yourself before you get done, or before you ask the question, and then mute yourself when you're finished. Mike, I'll start with a question.
Okay.
What about streaming companies and internet providers?
Yeah, I think another fascinating theme, I think, for 2021 is going to be the whole 5G thing. So again, anything that's related to streaming, there is a company, I believe it is called Fastly. And I think that's a great company to own for streaming. It helps and it makes it easier to be able to stream things on whatever device you're on. So I think 5G and streaming is a big deal and will be a great theme, because I just go back to, again, I think we're working to a world of we're getting away from these big monster networks at companies. And how can I be able to remotely work from my house, from Starbucks, wherever it is? We all see it in the world. If you follow housing prices, the prices of houses are going through the roof because people are saying, hey, I'm going to get out of the city and I'm going to go to the suburbs and I'll be able to work remotely and things like that. So I don't know specifically names for streaming. I think Fastly, again, is one of those. But yes, streaming and the data is another big theme that I don't think is going anywhere.
Anybody else have a question?
Hey, Mike, it's Jessica O'Brien. How are you?
I'm good. How are you?
Good to see you.
Yeah.
Not really a question, but did you see the article about the guy who lost his Bitcoin password and now he lost like $200 million?
I didn't see that one. And it's interesting because Bitcoin has gone gangbusters again. And if any of you were there, it was 2 or 3 years ago, we did that. It was the rage. And probably a third of my presentation was on Bitcoin. And if you remember, what I said was, I believe in the technology behind Bitcoin. I don't know if I believe in Bitcoin itself. And I still don't believe that I changed my theory on that. There is a place for Bitcoin. I'm not saying that it's not valued and it's not something that has some worth to the world. I still will hold true that I don't believe that Bitcoin is ever going to be the norm to anything. And the reason why I say all that is because that answers your question. Is the problem you have with Bitcoin is because it's all anonymous. What happens when I forgot my password? What happens when somebody steals my Bitcoin or finds a way to hack it? I have no way to be able to go and prove that it was my Bitcoin or anything else. So one of the biggest benefits of Bitcoin is also one of the biggest hindrances to Bitcoin. And sooner or later, we all know how the world works with cyber attacks and everything else like that. I think sooner or later, somebody's going to find a way to hack into some of those Bitcoin networks. And then I think you got a big problem on your hand when nobody can prove what was theirs.
The article that I read, that guy, he had 10 attempts to enter his password and he has 2 left and then it's permanently locked out.
Wow. Yeah. You guys have heard me say this enough. I'll never tell anybody what they should do, shouldn't do. But if it comes down to that and I got $100,000 or $200,000 in Bitcoin and I got 2 more chances to put in the right password or I lose it all, I don't want anything to do with that.
Mike here.
Hey, John.
How are you today?
I'm doing well. How are you?
Terrific and getting even better. I have a question in your Rotary. In the past, we were given some tax breaks that might have helped with contributions from IRAs. There could be other incentives to support charities. Can you give me an opinion on how you think that might affect church donations, Rotary donations, whatever?
Yeah, I may not be able to, I may not be answering your question exactly the way you're asking it. And if you need a follow-up, ask it. In the world right now, unfortunately for charities, a lot of the tax breaks have been taken away. So that we used to be able to do. The biggest break, in my opinion, that's out there, if people are looking for tax breaks and ways to be able to give to charity and still get some benefit out of it, is if you are over the age of, it was 70 and a half, the law got changed last year to 72. But if you are in required minimum distribution mode in an IRA, you can take that required minimum distribution and give that to a charity. The benefit to doing that is when you take money out of an IRA, that's taxable income to you. So we'll just use an example that somebody's got $1 million IRA and they're required to take $100,000 out of it. When that $100,000 come to them, that's $100,000 of taxable income. If you assume they're in a 25% tax bracket, that's $25,000 in taxes. You can give your required minimum distribution to a charity, and then it's like you did not take that distribution. So in theory, if you took your $100,000 and gave that all to a charity, you saved yourself $100,000 of taxable income, or your tax benefit is $25,000. Now, again, you're going to give all that $100,000 to the charity, you lose that money. But if you're looking for still ways that you can do charitable things, the best thing that's out there, in my opinion, right now, is if you're able to take your minimum distribution from an IRA and give that to a charity. Does that answer your question?
Yeah, and Rotary has made available to several years since I'm over that magic age, and it is quite. I use it for not to hurt anybody's feelings, but Purdue major donations, church.
Yeah.
Write 1 check a year, and it works well.
Yeah, if your question really is for Rotary, what can Rotary do? I would say that Rotary should be doing presentations about that. Because a lot of people know that it's out there, but don't know what the details of it are, don't know what they can do with it. And there are some rules and some stipulations on it. It's only your required minimum distribution. You can't just give whatever you want. So there are some rules about what you can and can't do. But if you're asking what can Rotary do to try to get people to still make charitable donations, that would be the very first thing I would be doing. Is I'd be harping on the people, because I can tell you I'm a money manager by nature. And I don't know what the percentage is, but I have a huge portion of my clients only take it out because they're required by law to take it out. They don't want it, but they're required by law to take it out. So if Rotary can convince those people to give their money to Rotary as opposed to just taking the money themselves, I think that's a huge opportunity.
Well, we've been marketing that in our district this year for sure. So we keep it up. Well, okay. I don't know how, it's hard to track how successful that's been. Right. I know there were several people that during the training session said, I didn't know that. So anyway, thanks.
Well, you know, I bleed Rotary. If I can ever help or be an advisor on anything, I'm more than willing to do it.
Thanks, Mike.
Yep. All right, you guys are out of questions for me. You guys were easy this year. Either that or my presentation wasn't. Yeah, I didn't put as much in it this year.
Like, I think you were a little hard on yourself on your grading there. I think you did better than some of the grades you gave yourself.
I will always be hard on myself, but I will tell you, because I don't know if we did it we did it at one point. I really should have done it for this year. This really is a million times harder than you think that it is. And I know that nobody's judging me by it, but if I just said, everybody, just guess where you think the markets are going to be. Look at last year. How many people predicted the stock market would go up as much as it was? Nobody predicted we'd get a COVID and have it go down as much. So to be as close as that I am on some of these things, I'm not going to lie to any of you and say that even to myself, it's pretty impressive. It's not, if any of us could do this, Warren Buffett can't do it. If anybody could do it, we'd all be sitting on a tropical island right now with zillionaires. So yeah, I'm always hard on myself. I talk at my company that when we do certain things, I don't ever give anybody a 10 out of 10. I don't hardly give anything in the world a 10 out of 10 because I'm just by nature, I think we can always do better. So I appreciate it. Yes, I'm very happy. And if I thought my predictions every year stunk, I would honestly tell you guys I don't want to do this anymore because I don't think I help with anything. But yes, I overall, believe it or not, I think I do a very good job at making these, because these are just guesses. Again, I don't know any more than anybody else does about where things are really going to go. That's why I don't really like to get.
Especially when you got hit by COVID.
Right.
Okay? There was nobody predicted that. So. Right.
Well, that's why historically I don't give you guys names. Because I don't ever want somebody to go out and buy something that I recommended and then come back because it did terrible, or vice versa. I don't want anybody with the expectation that I gave you guys a great name this year, so you're going to expect another one next year and the next year. So that's why I usually give themes and things like that, because it's really, you know what, let me end by saying this. The stock market will go higher. I tell my clients religiously, and this will sound so weird and crazy, but if you take anything from anything I've ever said on all my presentations, take this. The only way you lose money in the stock market is one of two things happening. Number one, we get a COVID like we had in March last year and you panic. And when the market goes down, you sell because you're scared to death about what's going on and you sell. Or number two, you need your money and you are forced to sell at a time and place you don't want to. If you are in the right things for the right reasons and things like that, you will not lose money in the stock market. Look at it since the Great Depression, and it always goes and finds a way higher. We're 1 or 2% from the all-time highs in the market. I have no idea what's going to happen, but I promise you all, 5 years from now, 10 years from now, 20 years from now, the stock market will be higher than where it is now. So overall, buy stocks and own them and just stay in them and be in them, and they will treat you fine. Just don't panic when something bad happens, because the next bad thing will happen sooner or later. I don't know what it is and when it will happen, but another 20% drop is coming at some point. When that happens, don't panic. And in fact, look for things to buy when that happens.
That's basically what I did. I bought some stock when it was in March because it was really down. And unfortunately, I bought Ford. I bought Ford at like $1.90 something a share, and it's now over 10. So,
yep. And don't ever
lucked out on that one.
You're never going to buy the stock at the lowest price, and you're never going to sell it at the highest price. You can't try to do that either, because you'll never do it.
Yep. All right, Mike. Thank you very much. Anybody else got one last chance for questions for Mike? Anybody? Mike, I appreciate it. I always like your input. I think that you've been it's every year I look forward to this.
Great. Thank you all. I love doing this. I find this very fun. So as long as you guys want me to do it, I'll keep doing it.
All right. Does anybody have any announcements or anything you want to talk about?
Jim, it's Jessica. I have 2 club announcements, if I may. The first is, don't forget, I still have Rotary shirts for sale. I know it's been a long time, but I still have men's and women's medium, large, extra large Rotary shirts. And maybe one day we can all get together and wear them. But if you want one, either message me or call me. I have them here at the Salvation Army. And the second announcement is a lot more exciting. The Alinsky Award Committee has been meeting, and we have we're announcing today who our recipient is for this year's Alinsky Award. And it's going to be Dr. Easton Watkins, Superintendent of Michigan City Area Schools. It was a really tight vote. Actually, she won by 1 vote over 2 people who tied for second place. So it was really tight. We had 7 nominees this year. And our plan is to present it on February 11th, and clearly it's going to be a virtual presentation this year. So we're going to let her know when we'll get a press release out. But if you guys want to plan on joining us for our virtual meeting on the 11th to support that, that would be great.
All right, and just to remind people that why are you? What is the money from the shirts going to?
Oh yeah, it's been, wow, that's been a really long time. But if you guys remember the Rotary bench that we plan on putting at Franciscan, we still have about $600 to raise for that. We did have some club donations go towards it. The district grant is covering 1,200 of it. But minus the cost of the shirts, we still haven't made up the amount yet of the cost for the shirts. So please consider buying a Rotary shirt or two, give one to a loved one. They're $20 each. But yeah, the cost is helping to install the Rotary bench at Franciscan Hospital.
Okay.
Jim, I have one quick thing for your treasurer and your club is that you're going to receive a district dues billing. And your district dues were not eliminated for this 6 months, but they were cut in half. The cost for pets has been reduced from $250 to $50 for your president-elect, and the district pet still charges the district $150, but I lost that argument. And then the last one is there's typically a $6 district conference fee, and that has been waived. So when you see that, there should be money in your club to maybe even help pay for the bench. I don't know.
All right. Thank you very much, John. We appreciate that.
Yeah, I've been waiting for Washington to call to invite me to come and work on the national debt, but my phone has not rung yet.
Oh, too bad. Anybody else? Matt Kubik, you still on the line?
I am. Every Rotarian, there are opportunities for matching funds for your donations. If you go to the, what is it, the district website, Jim?
No, you can go to our website, or you can go
perfect.
to, or it's in the newsletter.
I urge you to take advantage of that, double your money by giving your donation and getting it matched.
Well, that has to be done by the end of January, so don't hesitate.
Yeah, right. You've got 9 days, 10 days.
Yep. Anybody else? All right. Well, I hope you liked our new format for the meetings. If anybody has any problems with it or any comments you want to make, just go ahead and email me, and we'll see how we go from there. Again, thanks, Mike, for your presentation. I really appreciate it.
Welcome.
And thanks everybody else for attending.
And
Talk to you guys.
What's our format for SARG programs?
You and I have to talk over the phone. We'll give you a call.
Okay, Katie Eaton is designated as Sarge today, and if she had anything she wanted to say, is she in the room?
She just left.
Oh, she just escaped. Next week is Kara Jones. Is Kara in the room? I will contact her. But then,
Okay.
Jim, you and I should confer then. And then we are pretty much set through February, but starting in March, we'll be starting a new rotation of SARG programs, and we need to get some fresh blood into the SARG program. So if you're willing to take that on as a task once every couple months, every few months, not very often actually, but we would like more Rotarians to be part of helping with our SARG programs, and it really is a good and fun thing to do, engaging with everyone. And so let Jim or me know, and we can develop a new SARG program list. Thank you.
All right. Thank you, everybody. And we'll see you in a week.